There is so much red in the market right now, dude. So let's take a look at what opportunities are open for us on the horizon. I'm going to share about 3 stocks I'm buying this week and 5 more investments I'm closely monitoring as well. I also have a little bonus one for you at the end. Between the uncertainty involved with the pandemic recovery, as well as the Colonial Pipeline hack about a week ago, combined with the escalation of war in Israel and Gaza, the likes of which we haven't seen in like 7, 8 years, all smothered with a healthy dose of mega inflation fears threatening to weaken savings, there's plenty to be worried about. Check it out here. We're also seeing lots of the big dogs being rattled over the last 3 months, initially because things were just getting a little too hot, probably. Apple's down on the 3-month chart, but this last week in particular has been rough, seeing a range of about 140 all the way down to 122-ish, which is a bit more dramatic than we're used to seeing with Apple. Similarly, Tesla's down like 30% in the last 3 months to the high 500s now. Facebook hasn't suffered as dramatically because it was kind of already like down in the dumps on security related drama over the last few months. But we have seen a good 10% dip in the last couple of weeks. The more adventurous of you, following bleeding edge funds like ARK's Genomic Revolution Fund, are probably understandably waking up every morning in a pool of your own tears. From 116 about 3 months back down to about $73 right now at the moment, ARK funds are rapidly rewriting the definition of secular rotation. In contrast to these stocks, however, strangely, the Dow and NASDAQ are up good margins in the same 3-month period. I ran a poll on the channel yesterday to see where you guys were at with all this, and it looks like by and large, most of you are in a position to be able to capitalize when things go on sale. Check it out here, 57% of you are licking your chops right now, but a good 33% of you are also either confused or scared with what to do, with a handful of respondents saying they're fleeing from stocks and crypto to gold and or real estate as well. Personally speaking, our tourism-dependent business has been getting absolutely slaughtered in the last kind of year for obvious reasons, though our real estate-based businesses are doing just fine. When I dove in heavier to stocks last year after the crash, I was handsomely rewarded and will continue to have cash available for similar opportunities in the future, though I don't know if we'll be seeing anything as clear-cut and concise as what we saw in 2020, where we saw it just kind of like boom, drop like the fastest it's ever dropped, and then boink, like recover the fastest it's ever recovered. It might be kind of like we see a slowish meltdown, especially for particular stocks over these coming months. If you're new here, my name's Trey, and I'm a Canadian-American serial entrepreneur and investor living here in Japan. Welcome. Let's dive right into some of the stocks I've been buying this week as we're seeing some of the prices declining. First, we have Palantir. I'm kind of in the mode of always buying into Palantir, and I've been upping the dosage a bit these last couple of weeks while prices have been down. Check out the 3-month price chart here, where we can see that the price has kind of been slowly melting down from $34 to where we sit now at about 18. There's lots to be excited about with Palantir, especially for those of you who are interested in making money. Between massive revenue growth and expanding client numbers across like numerous industries, I think Palantir is poised to surprise us in the coming years, regardless of overall market conditions. A huge portion of their income comes from clients who aren't really swayed by general economic conditions like governments and militaries, while a growing portion of their income is also reaching into some of the largest and most like influential companies and industries on earth. I dropped a video recently looking into the first quarter earnings and what implications those have for Palantir's going forward, including the upcoming availability of the Foundry software, which they're going to open up to the public or investors, as well as Bitcoin adoption. So please check it out up here. If you're new to Palantir, however, please keep in mind that it does trade for pretty bonkers multiples. So you're paying now for large future expectations, like very much so. Second, y'all know I'm in the habit of buying Nokia regularly as well. Over the last 3 months, it's actually up pretty big, though I don't know if you can say that's because of good news for Nokia necessarily, or just because it's been so battered in previous months. But the last week has been a bit rough. Nokia is unique because it's in a position where it flies so far below the radar that the masses haven't realized how much growth could potentially be on the horizon. And so when you're looking at, fundamental type things like PE ratios and PS ratios, that stuff that nobody ever really looks at anymore, It's kind of confusingly cheap. Not to mention, most people who use the internet around the world every day are probably dependent on Nokia products or services somewhere along the line. There's a lot to be excited about, but if you haven't looked into Nokia, please check out my most recent video linked up here if you want to learn more. Also wanted to mention that they were just awarded an 80 million euro damages claim from their larger rival Ericsson for corruption spanning numerous countries and a bribery charge in Djibouti. Ericsson has been falsifying their books and is now getting the book thrown at them by the DOJ too. And so that might open the doors for more credibility and more opportunities for Nokia going forward, which is kind of exciting. Third is a company I haven't spent much time yet covering on this channel, but I will be soon, AMD. AMD has shown shockingly strong growth figures in the last year, and between their conservative and solid financial management, paired with generationally superior products over their duopoly competitor Intel, there's a lot to be excited about. I've been dipping my toes into AMD a little bit over the last kind of like week, but let's keep an eye on it because they just broke through the $74 resistance going down. So we could be seeing even more price drama as far as the price goes. That $74 line has held, I think, for the last like 6 or 8 months. If you want to follow my updates and learn more about AMD, what makes them dope, how they could fit into your portfolio, please subscribe down below. Next, I wanted to share about 5 investments, stocks or crypto, that I'm monitoring closely as well. First, I wanted to get started, I guess first and second, I wanted to get started with Tesla and Bitcoin. As you can see here on the 3-month price chart, Tesla's been getting curb stomped in recent days. I think this is more the result of a cooling down market than it is related necessarily to Tesla's performance declining or something like that. On the contrary, we're continuing to see strong growth, especially in China, but strong growth around the world. We're seeing more actual viable rivals stepping up to the plate too, like VW, Audi, Porsche. And in Japan, Nissan and Toyota have also promised cars coming up on the horizon, though there's nothing really Tesla-esque out yet. I did make a video talking about a potential partnership between Tesla and Toyota. Click up here if you want to check it out. But as far as power delivery and storage and battery density and production output, I'm not sure we found a real competitor for Tesla yet. Math-wise, however, long-term, Tesla is obviously worth more than the current $500 price tag, assuming they continue to grow. But we do also need to factor in that it's been really, really overpriced, overhot for the last little while too. Elon dropped a bombshell on the crypto market by saying they would be suspending accepting and transacting in Bitcoin, though they will be holding on to their current position based on the fact that Bitcoin transactions are ultra environmentally unfriendly. Upon doing some research, apparently even just one transaction, like a Bitcoin transaction, costs something like the amount of energy the average American household uses in one day. And it's apparently something like 1 million times more energy consumption than a Visa transaction. So that's pretty environmentally unfriendly, which stands almost polar opposite to what Tesla's kind of aiming for. And so Elon said they'd be looking for more environmentally friendly cryptos to transact in. The crypto market responded harshly, obviously. And as usual, when Bitcoin drops, most of the other currencies do too. But it's important to note that he only said suspended. He didn't say we're out of Bitcoin for good or Bitcoin is obsolete, so we're moving on to Ethereum or something like that. So there's a possibility that when he announces the end of the suspension, things jump back up again. Either way, I think there's a new floor on Bitcoin, so I'm not too worried about it going to plop down to like 7,000 like it was last year or something like that. I did also mention adoption on Palantir's behalf in yesterday's video too. That being said, I think both Tesla and Bitcoin could move lower, keep moving lower, so I'm watching them more attentively. Though generally speaking, I like to hold on stocks for the long term. I'm happy to be in and out of cryptos a few times a week because they're always moving. And I'm here in Japan, and the stock market is only open when I'm asleep, basically. But also because cryptos are so volatile. Third, on the backs of that comment, I'm always watching Ethereum. I'm enjoying the price gains we've seen in the last few weeks. I'm tempted to sell a little bit of my position because things have grown so well, and I've done, made some good profits on that. But I want to hear your guys' thoughts on this, especially from those of you who've been in Ethereum long term. What do you guys think? Is it time to, grab a little profit? Number 4 is Rocket Mortgage, or ticker symbol RKT. Just take a look at this stock chart, man. In early March, we saw a bit of a frenzy that blew the top off this sucker. But since we've entered May, Rocket's dropped almost 30%. Before I mention anything about it, I have to ask you guys, like, are any of you guys watching this stock or been in this stock or like this stock? I've been looking at it, time and again, but I haven't actually done like an in-depth research dive into it. And I haven't actually pulled the trigger. Though we've seen revenue growth of 212% in the last year, Rocket is apparently revolutionizing a lot of the crap you have to deal with when looking into mortgages. I haven't used any other products, and I probably won't ever, so my knowledge is super limited, but they're now trading at a PE ratio of something like 5.9. They are, however, saddled with some juicy levels of debt, and don't inspire mad confidence for blokes like me who tend to put the lion's share of my investment funds into more conservative companies. So I wanted to hear what you guys think about Rocket. Are we kind of like getting close to a good opportunity here? Before I share the fifth and final stock I've got my eye on, I wanted to invite you guys to check out my newly launched Patreon page where you can vote on what videos we create moving forward, as well as gain early access and probably free access to the app that we're creating that will help you up your investment game as well. Links in the description below. Fifth, let's take a look at an old friend we haven't talked about on this channel in a little while, Lemonade, ticker symbol LMND. Check out this grotesque 3-month chart where we see the price has dumped from 170-ish up there down to about 64. I've made a few videos looking into Lemonade in the past, which you can peruse up here on this playlist, where I talk about the potential for it to become not only industry changing for the entire insurance industry, basically, but also for a potential source of extremely loyal and young clients for generations to come. There was a lot to get excited about with something like 200% year-over-year revenue growth, but I did mention that I sold out of my holdings between 160 and 180, citing the fact that the price was just freaking bonkers for the actual amount of sales and growth that were going on in the company. There are also a lot of gloomy discussions going on around the quality of the leadership and their character. Haven't looked too much into that. If you know anything about it, let me know down in the comments. But if things keep trending down as aggressively as they have been, and we get down especially below 50 or 45, we may be looking at another really good opportunity here, especially if you're not exposed to the insurance industry. Let me know your thoughts on this one. Finally, honorable mention goes to Teladoc, who's shed almost 2/3 of their market cap since the end of February. I did a video breaking down who they are and what potential they may have going forward, so please check it out up here if you're interested. Also, let me know if you're interested in grabbing some more Teladoc, as it's getting its face absolutely shattered. Click up here if you want to see a bit more in-depth what kind of investments make up my portfolio as well. Looking forward to chatting with you guys in the comments section. Love you guys and stay generous.